everyone, since today is the last day of the year, I thought this would be a good time to look back at how things turned out. Earlier this year, I shared a stock prediction series where I talked about 25 different stocks, and now that 2025 has come to an end, I want to walk through how those stocks have performed so far and what the numbers actually look like today. This is not about being right or wrong. It's really about learning from real data and understanding what happens when you stay invested over time. So, as part of my stock prediction series in 2025, I covered a total of 25 stocks throughout the year. I recorded them on different dates, and since today is the last day of the year, I wanted to show you the performance of those stocks and how much return they would have generated by now. Interestingly, 10 of those stocks have already crossed my 1-year price target, which honestly is more than what I expected at this stage. And let me explain how I tracked all of this, because that is very important. I've been maintaining a spreadsheet that I shared publicly throughout the year. In that spreadsheet, I recorded each stock's price on the day I talked about it, the date it was recorded, the current price, my 1-year and 5-year price targets, and the percentage returns. On top of that, I also tracked my own average price and returns for the stock that I personally hold. So in this video, I want to go through that spreadsheet and show you what would have happened if you invested $1,000 in each of those stocks. And since there are 25 stocks, that would mean a total of $25,000. By the way, you can still view this spreadsheet and bookmark it for future reference. It has been public all year, and I think it is a very helpful way to track ideas over time. Alright, now let's talk about the results. We had some really strong winners in this list. A few are already up more than 100%, including Palantir, SoFi, AMD, and First Solar. There are also some stocks that are very close to that level, like Vertiv Holdings and Tesla. At the same time, not every stock worked out perfectly, and that is expected. We did have some stocks that are currently down. For example, MercadoLibre is down about 3%, FICO is down about 13%, Dutch Bros is down roughly 3%, Restoration Hardware is also down about 5%, Duolingo is down about 55%. This is the biggest unrealized loss for me so far. And ServiceNow is down about 20%, HIMS is down about 43%, and Sprouts Farmers Market is down roughly 5%. I want to be transparent here. I personally hold some of these stocks that I currently down as well, and I'm okay with that because I'm confident that over the next few years, many of these companies can turn things around and deliver strong returns. Not every investment plays out immediately, and that is part of long-term investing. When you put all of these stocks together and look at the combined performance, the results are actually very solid. If you invested $1,000 into each of these 25 stocks on the dates when I originally recorded them, your total investment of $25,000 would now be worth about $32,400. That comes out to roughly $7,400 in profit, which is close to a 30% return. In my opinion, that is a very good result. It means this portfolio would have beaten the S&P 500 by almost 2 times and outperformed the Nasdaq by about 10% over the same period. Now, let me share how things looked on my side as well. This year, I made close to $30,000 in realized gains, which I have to pay taxes on. In addition to that, I'm holding around $32,000 in unrealized gains, and overall, it has been a very strong year for me as well. I do not think we should pressure ourselves to beat the market every single year. The market always gives opportunities. What really matters is being patient, doing your homework, building a list of stocks based on both fundamentals and technicals, and being ready to act when the market gives you an opportunity. Right now, going into 2026, the market feels more neutral. At the same time, many analysts on Wall Street are still bullish heading into next year. However, there is one thing I want to highlight, especially for newer investors. Retail margin debt is currently at an all-time high of about $1.21 trillion. This is important because when the market pulls back, margin accounts are usually the first ones to feel pressure. Forced selling during those moments can lead to much deeper dropdowns. Because of that, I personally do not recommend using margin to buy risky assets. I do not use margin myself. It is always better to invest in a way that lets you sleep well at night. With that said, I would really like to hear from you. How did your investments perform in 2025 and how are you thinking about positioning yourself for 2026? Feel free to share your thoughts in the comments so everyone watching can learn from each other. I will also be sharing my top stock ideas for 2026 in a separate video soon. So keep an eye out for that. If you are not subscribed yet, consider subscribing to the channel so you do not miss it. And if you invested in any of the stocks I talked about this year, let me know how they worked out for you. Thanks for watching and I'll see you in the next one.